Hello again, everybody. Dr. Richard Smith here with the Foundation for the Study of Cycles and Cycles TV. Hope everybody's having a great summer or winter, wherever you are. Forget that we have a lot of international folks with us. And it is July, what is it, the 29th? Almost the end of July. Unbelievable. We're in the middle of summer. And so far, markets are holding up. And you got to say, at least in the short term, Trump is winning. We'll see how long it lasts. If he's getting short-term gains at the expense of long-term success. But time will tell. In the meantime, we have been exploring how to use cycles to help build a portfolio, a little longer-term portfolio. And this is really my work, right? I've been working on how to use cycles, and I've been working on how to build portfolios for a long time now. And I'm excited about how these tools are coming together and how we can use them to be better investors, better traders, short-term and longer term, and how we can really build portfolios, because investing, successful investing is about more than, whoa, I caught that move. It's really about how we put together a group of ideas for a period of time in the context of our financial lives, right? Everybody's got a different life. Everybody's got different financial situation. This idea that, one size fits all is just a scale capitalist idea. It's actually not the reality of every human being, every individual on this planet who's in an utterly unique situation. So all of what we talk about here are really setups. We know we talk about some triggers too, but the real triggers are what's going on in your life, what's going on in your portfolio. Where are you at? What do you need? How do you take these ideas and put them into action yourself? So that's why we've developed tools to help you do that. And I'm really excited about the way that the tools are coming together and some of the things that we're able to bring to you now. So we will pick up where we left off last week and look at markets. We've been scanning the S&P 500, looking for great cycle setups with some positive momentum divergence, and gonna keep putting it all together week after week until we really learn how to use cycles, use portfolio and risk management to be better investors and traders. Hello, Merv. Thanks for saying hello. And let me just get things set up here. Make sure nothing's on fire, and we'll get going. All right. See what configuration works here. All right, let's go a little bigger on the shared screen and smaller on me. Wes, if you can help me out with that and grab the right configuration. We'll start there, and feel free to make any adjustments that you see will improve things, Wes. All right, so I just wanted to start out here briefly with some cycle forecasts that I gave back at the 2025 launch of the year when we did our Market Cycle Summit. And I was just looking back at these and said, wow, that was pretty astonishing. So this was around January the 8th when this forecast was made, and it's public. You can see it on our YouTube channel. And this was the forecast. The pink line here was the forecast, and caught that February top and right into that April bottom. Maybe a little early here, got an early CRSI trigger that failed, and then another one here that really took off. So that was pretty cool that the cycles did that good of a job forecasting, in this case on the NASDAQ. Now we will bring this up to date. And let's see, how much data are we looking at here? We got 850 bars. So going to update this to incorporate the latest data on the NASDAQ. And maybe bring it down to about 850 bars, including the current data, and see where we stand today. So clearly, the number one cycle here, this 122, still like this 81. We got this 203 and 300, 1, 2, 3, 4. All right, so meanwhile, we've got the cyclic RSI continuing to break through the top and just go straight up, right? A couple of weeks ago, we were looking for a potential top. We did not get it. We came close to the line, but didn't cross below it, didn't really get a sell trigger. And now momentum continues straight up. So we are not on a sell signal in the NASDAQ yet in equities. Meanwhile, we do have this little trough here that looks like a pullback, but not there yet. So we'll be keeping an eye on this. Similarly, in the E-mini, in the S&P 500, similar setup, right? And this was the forecast at the beginning of the year. I'd say it did a pretty darn excellent job there, but let's bring it up to date. And as I do this, I'm also showing you how to use the cycle analyzer. So these are how I update my endpoints, the last endpoint into my analysis, and then the first endpoint. So let me just refresh with that expanded data, and then I will go back to my last endpoint and set it to 850 bars. Okay. And we got this 128. Very similar. What don't I want here? It's 171. I think I'll take that one out. So similar to the NASDAQ, obviously, no surprise. And again, momentum still heading straight up, although we do have a longer term momentum divergence. So I'm still nervous about equities. Like I said, I'm not short, but I'm not backing up the truck to be long of the indices either. A couple other things, just keeping current here. Bitcoin, this was the forecast that I gave of Bitcoin back at the beginning of the year. Came down into this low. I'd call that a win. But let's bring Bitcoin up to date. That's with 1,050 bars. Let's bring it. Yeah, let's stick with that for starters, especially because we got some longer term cycles here, 285. But really, this 84 is very strong. 138. Similar to what we saw last week on the daily data. Definitely some negative momentum divergence. Even got a little bit of a cyclic RSI sell trigger here. But the cycles are showing some room to run, maybe sideways to up for Bitcoin, but keeping an eye on that negative momentum divergence and on this cyclic RSI sell signal. And lastly, well, not lastly, actually, the dollar, US dollar. So this is a very important one. It looks to me like the dollar is at a significant bottom. And with the trade deals that Trump has been winning, it's hard to see how the dollar collapses from here. Meanwhile, this is a trade that's been setting up for a while and has triggered to the long side in a significant way. And momentum is heading up and even breaking the recent highs. Okay, so I think the dollar heading up is one of the major cycle opportunities together with momentum, right? So you've got positive momentum divergence. You got a cyclic RSI buy signal with a retest. So this looks like a cycle plus trend to inform us really over the next 6 to 12 months. And I'm just doing all this as background because we're working on building a portfolio, and we have to know what are the bigger trends that that we want to be incorporating into our portfolio. Here are 2-year treasuries. And very strong, super strong cycle, 189 and this 85 also. Not ideal stability, a little low, but still something I want to keep an eye on. But really this 189 cycle is the dominant cycle in treasuries. We got in 2 years, right? We've got the sell signal and we've got momentum declining. So this does not bode well for the Fed cutting rates. Same themes we've been looking at, with some negative momentum on equities. Bitcoin, even though the cycles look like they might have a little life left in them, stronger dollar and lower treasuries, which would mean higher rates. So all of that to me continues to point to some risks ahead for our risk-on world that we've been living in for a little while. So that's kind of the big picture. Let me make sure that don't get disturbed. All right, so that's what I'm looking at big picture-wise. Now, in terms of some actual, excuse me just a minute. Okay. Signals. These are some of our tools. These are available in our professional level tools, but I'm sharing them here with you today. And this is what we call the market tides report. And we can look at what are some of the biggest opportunities, bottoming and topping. The US dollar, DBA, and commodities. So that's interesting. Usually you don't see the dollar and commodities going up at the same time, since commodities are priced in dollars in the US, but we'll see. And real estate. So we looked at some of these themes last week. And on the topping side, we've got silver, including the miners, junior miners, silver miners, and silver futures itself, along with Solana, Ethereum, copper, uranium. So again, all of these are ideas that we can then explore and look at moves that we can make to, over time, over the next few weeks, build a longer term portfolio. So just moving through here, this is the geomagnetic data that we've been looking at the last few weeks. And I just want to highlight one thing here, which is the cycle says that the geomagnetic data should be heading up. But so far, the geomagnetic data is not heading up. Lars did an extended show on Cycles TV yesterday on the geomagnetic data. So if you haven't caught that, please, Lars is the expert on this. I'm just a user of the data. But we see it still kind of tailing off so far, and we have not gotten a top in equities. We are seeing some downward pressure on equities today, but it's pretty minor relative to the gains that we've seen in equities. So nothing to really get too worked up about. Could make an interesting entry for a short trade with a tight stop. But that's not what we're here to talk about today. All right. Another thing I wanted to look at briefly is trend data. We haven't talked about this in a while, but just wanted to highlight that, here's equity futures, and these are trends on shorter term, 5-minute, 15-minute, 30-minute, hourly, 2-hour, 4-hour, daily, and weekly. And there's pretty much not like a red cell in here, maybe some of the 5-minute data right now, but the trends on equities are green, 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 right? So we're always very careful about trying to step in front of a train, a bullish train, in spite of what the cycles say. That's why we keep a close eye on the cyclic RSI, and so far the trends in equities are bullish across the board, as well also in Bitcoin and Ethereum down here. Trends very bullish, maybe fading a little bit in Ethereum. We'll see. In treasuries, 2s, 5s, 10s, and 30s on the bearish side, especially out on a longer time frame. Bearish treasury prices mean higher rates, etc. So metals, what's this? Gold, silver, copper, maybe palladium and platinum. Weakening in the shorter term, still bullish on the longer terms, but definitely seeing some weakening in the metals. And energies, let's see, gasoline and oil have been weak on the longer term, but starting to get a little bullish in the shorter term, which is interesting to me. And then, of course, the dollar's been turning bullish. We've talked about that. And the yen and the euro on the bearish side, pretty much across the board. All right, so that, I think, is the big picture. Now we want to get into looking for some individual ideas that we might ultimately want to incorporate into a portfolio. And this is our new watch list scoring scoreboard. It's not the prettiest user interface. I get it. We didn't make this to be super pretty yet, but it works and it is very functional. And we started to cover this last week. You can basically set up any little card that you want with any collection of assets, and even for any time frame, if daily or weekly, if you're a basic member, or intraday. I actually have one down here on the let's see, E-mini futures here. 1 minute, 5 minute, 15 minute, 30 minute, 60 minute are all kind of turning bullish at the moment in the intraday data. I'm not going to cover that today, but I just wanted to show you what's possible. So I'm looking at a lot of different things here. I've broken things down into sectors: communications, energy, commodities, materials, financials, some ETFs that I follow. So we started to look at this last week, and in particular, I've been maintaining a list here of ideas that some of you recommended last week, and I want to hear from you again this week and see what you'd like to look at. But while you are putting your ideas in, and please do tell me what you would like me to look at if there's anything. I know we got some big earnings coming up in Mag 7 this week. We can look at some of those, but tell me here in the comments what you would like to see. And we're gradually building a watch list of good ideas. So going to be covering some of those today. And out of all this right now, I can just go here and click on the hot only, which will give me the signals that are 5, 6 or higher. And we already saw the silver miners ETF. That's probably the stronger, and the platinum shares ETF. Super strong cycle signals there. What else? Berkshire Hathaway, we covered that last week. Interesting, JP Morgan Chase showing up with some potential sell. That might be something to look at. We covered Procter & Gamble, Coca-Cola. That could be interesting. Let's take a look at Coca-Cola. All right. So right off the bat here, I look at this and I see negative momentum divergence. So even though there are strong cycles, I don't like how the momentum is behaving there. Yeah, not crazy about that one. Might put it on a watch list, but I really like momentum to be on my side. All right, so going down now, I want to show you some of the cycles that we've scanned for recently that look really interesting, and please continue to put your ideas that you would like me to look at. But we covered the dollar, so this is UUP. This is the this is the ETF that covers the dollar, in case you're not in the futures markets. So not surprisingly, very bullish cycles with bullish momentum. So this is definitely one that I would like to keep an eye on. So I'm going to pop back over here to RiskSmith, and I've got my collections here and my cycle trades collection. And now I want to just start adding some ideas to this collection. So I'm going to add UUP because I like how UUP is setting up there on the bullish side with the positive momentum divergence. All right, some other ones that looked interesting. XLE. Come on. Okay, maybe I gotta close this. Refresh. By the way, I'm using another feature here of this incredible cycle analysis platform. It's here under the data section. For some reason my cursor is balking. Okay, and I'm using the ideas where you can actually publish ideas that you're tracking and that you're interested in. So XLE, energy. Right, so very bullish momentum, bullish cycle, 176, 78. So energy looks very interesting to me, XLE. I think that's, let's see, I'm going to add that. Oh, we don't have energy in here yet, so I'm going to add that. Okay. Come on. Okay. WMB doesn't want to open. What's going on here? All right. Okay. Pod. So pod was an interesting looking one. This 89, 118, 174. Still a little downside, but the shorter term cycles are turning up, but probably not ready to really keep an eye, really go with this one yet, even though we do have some interesting positive momentum divergence here. Maybe look at this one in a couple more weeks. So you get the idea. I'm just going to add these other ones to my collection now. So there was WMB, Williams Companies, RSG, PAYX, Republic Services. I think they do garbage. I like that. Paychecks. What else do we got here? KMI, AG, AJG. I can even go do some bulk entry. KMI, AJG, ABT, and we've already got DBA in there, I think. Yep, ABT. Okay, so we'll add 3 tickers there. Oops, looks like I might have maxed out on my tickers that I'm allowed under a free account on RiskSmith, but that's all right. We'll leave it there for now. All right, so getting some good ideas here. Let's go back now and let me see what you told me you'd like to look at. KRE, okay, we can add that to our list here. So we're going to go up here and edit. I think KRE is the regional banks, but we'll just call it KRE. Get our data from Yahoo Finance, and we're going to add it to our TMC cluster. Got it. Any other tickers that you'd like me to cover? Hope I haven't missed anything. Feel free to put in more ideas if you'd like me to look at them. All right, now let's go back and look at our list here. Paychecks looks really interesting. This Arthur J. Gallagher. And KRE, not firing really here, but let's take a look at KRE since some interesting cycles, 236. Seems like the dominant cycle, maybe this 117. Don't like the way the momentum looks here, pointing downwards. And the longer term cycle's up, but the shorter term cycle looking a little weak. So not something I'd really be fired up about going long, but we'll keep it on our radar. All right, so some of the interesting opportunities, paychecks. So I like a lot of things here. Got this 270, the 65. Let me just go a little shorter time frame here. 64, 150, maybe this 110. I like the positive momentum divergence. I like the CRSI buy trigger, and the cycles, you know, they've got some potential drifting higher overall. And I'd say a pretty good trend going on here over the past year. So yeah, that looks interesting. What else? This Arthur J. Gallagher. Coming down today into a cycle bottom, but I don't like that momentum pointing straight down. So I would not be a buyer of this, but I would be interested in keeping an eye out for a cyclic RSI buy trigger, but not super excited about it. Let's see, Republic Services. Do have some bouncing off of the bottom, but nope. All right. So out of all this, I think we already covered XLP and already have that in the portfolio. Maybe let's look at Regetti. So Regetti, I think they're in the quantum computing space. Interesting momentum kind of drifting up into a cycle bottom. Maybe. I'd be interested in it if we got a retest of the recent lows with a positive momentum divergence. All right, so that's a lot that we've covered. I've been going at it for half an hour or so. A couple more ideas, IDNA and O. Add those in. Let's go back here and use our new tools. Okay, and then O. All right. What is IDNA? Is that this Inselect Corporation? No. I'm not sure which one IDNA is, but O showed up and looks interesting. What's going on here? So definitely good momentum into a cycle bottom. This 137, 369, 167. Yeah, that looks interesting. I'd add that to the watch list. Except I can't add any more trades to it. So let me make a new collection here. Okay, so in cycles 1, we had, did we get PayX in here? I don't think it made it in. Nope. So we'll go to cycles 2 and we'll add PayX and O. See if that made it in. Okay, we'll go with the bulk entry. Realty Income Corporation. I like that, how it lines up with XLRE. Do we have XLRE in here already? Yes, we do. All right, so let's go now over to our cycles trades portfolio. So far, we got Berkshire, DBA, and XLP. And we're going to now pull up some new ideas to consider for this portfolio. So here when I'm looking at a portfolio in RiskSmith, I can pull up the collections that are in this drop down right here, my list of collections, and I can activate any of them. Okay. And then I can sort them by correlation to the existing portfolio, like UUP there, the dollar ETF. is very low correlation to the existing portfolio. I'm bullish on the dollar. Okay, let me check the portfolio settings here. So the $500 target risk exposure per position is my target. Okay. All right, so let me try adding UUP. It says I need 584 shares. So by adding UUP, okay, my exposure is $500 over a 1-year period. The position value is $16,000. So, it's not a very volatile ETF. The dollar, you wouldn't expect it to be very volatile. So to get $500 of exposure, you need to have a bigger position. And look, it only increased my exposure in the portfolio by like $100 because it's uncorrelated, even though I added $500 of exposure. And it increased my diversification. So you know what? I like it. Let's approve. So the next, after I've added that, the next least correlated opportunity is O and WMB. I think I wasn't crazy about WMB, Procter & Gamble, RSG, XLRE. I like O. Let's go with O. It's in the real estate space. We'll add it. Low correlation to the existing portfolio. And I think that might be good for this week. We'll continue building. So we added $500 of exposure, but it only increased our exposure by $232. Lowered our diversification a little bit, even though it increased our exposure discount. So that's interesting. I'm going to go ahead and approve. So now we've got 5 assets in the portfolio. Nothing really jumping out at me low correlation wise. So let's leave it at that for the moment. Going to remove these collections so we just can see the portfolio. We'll go over here and look at the correlations. So XLP, pretty highly correlated to Berkshire, and O is pretty highly correlated to Berkshire. Dollar, negatively correlated to real estate, to O. So on the whole, not bad. Last thing I'm going to do here is, now that we've got all of our positions that we want, I'm just going to say, only want $25,000 in this portfolio. So I'm going to rebalance and adjust all my position sizes. So that I've got equal exposure risk in all of them, about $265. And I've spread $25,000 equally across these 5 different ideas. Save. All right, we're making some progress here. Let me go back now and see. All right. All right, I covered a lot there. Get it. Basically, big picture, still have concerns about equity and other risk-on assets. Look like there's room for the cycles to run a little bit. Momentum is doing quite well. I don't like the negative momentum divergence over a longer period of time, and I don't like how some of the cycles are coming down. I do like the dollar. very bullish, cycle-wise, trend-wise, momentum-wise. Didn't cover gold, but I'm pretty bearish on gold and silver at the moment. We saw some of that in the cycles analysis too. And then we dove in to look for some setups with cycles and momentum using some of the new tools, and we found a few ideas and we added them. We looked at them first. We used the dashboard to see what was popping, and the things that looked interesting, we explored them a little further and went and looked at them a little closer. We kept a few of them. We rejected a few of them. And then I put that all into my ongoing collection that I'm building in RiskSmith and looking for uncorrelated bets to gradually build a portfolio that I'd be comfortable holding for a year or more. So that's it. So let me just see what's on your mind so far. Thanks for the greetings, everybody. Appreciate that. Wow, all over the place. Norway, Germany, California, fantastic. Gelbrex, if possible at the end, maybe review some emerging market cycles, right? Can you give me the ticker on that, Gelbrex? I know we should also look at the Mag 7 too. I think we got a lot of earnings this week, so that might be interesting. Hamilton, thanks for your exceptional research, Dr. I hope it's not too complicated. I mean, this is how investing and trading really works. So it is complicated. It is hard. Anybody who's telling you, no, just, buy here and sell here, that's not the whole story. It's not how it works. Rashid, if we also look at the cycle spectrum in order to have effective trade, which one should we rely or trust the most, stability or strength? Stability over strength. But really the stability plus the strength plus the spectrum ranking, they all work together. And then the cyclic RSI with the positive or negative momentum divergence, that is probably even more important than the metrics on the cycles themselves. So I think the cyclic RSI is probably the most valuable thing that the foundation offers. And really looking for those setups, especially where you get a retest and with a positive momentum divergence on a long cycle setup, that's when I get really interested. So hope that helps. Overall stability, ranking, and strength all kind of factor in. Harmonics also are important. If you see a 250 cycle and a 125 cycle and they're like a 1-2, that's definitely something that you want to be paying attention to. We looked at the regional banks ETF. We saw also on the hot or not that JP Morgan Chase was looking a little sketchy. So looks like the bank's financials, IDNA. I'm not sure what IDNA is, Tyler. That one didn't seem to work. So cacao, solar energy, corn. I need some tickers if you want me to look at those. If you would also look at the cycle spectrum, I think we covered that already. Okay, so some of these are repeats. What was the trade time frame intended for the portfolio you just created? So that was a target 1 year holding period, average 1 year holding period for the assets in that portfolio. So that'll be into the summer of next year. Okay. All right, so let's go back and wrap up just with taking a look at a few things. Okay. If somebody can give me a ticker for the emerging markets stuff, I'd be happy to look at that. Any other tickers that you want me to look at? IDNA, immunology, and healthcare. Okay, it's not showing up for me, but I'll look into it. All right, let's look at Mag 7 briefly. I think we got some big earnings coming up here. Where's my list? All right, so we've got Apple. So Apple is of interest to me personally. Now, I'm going to go with a little 850 data points. We'll move out from there. But the cycles that jump out at me on Apple are this 145. Let's get the cyclic RSI in here and this 52. Both got good stability. If I want to go out and do this 319, I really need more data. But on the whole, you know, I really like the setup in Apple right now from a cycles perspective. You've got, you know, multiple tests of the bottom line of the cyclic RSI. You've got bullish momentum. We'll see what happens on their earnings call. But personally, I'm pretty bullish on Apple myself right now. I think they've been beaten down pretty thoroughly. And I think they're going to do just fine. So that's Apple. I'd actually be interested in seeing how they might add to a portfolio. What else we got? I think Microsoft is earnings this week. By the way, look at this. I just want to note, you know, if you just look at the score here, the score is showing a little bearish on Apple, but I just said, no, it's actually bullish. So I think that's a good illustration. These are not like some kind of perfected symbol or system, right? You have to go look at it yourself. So gives you an idea kind of what's popping. So Meta's looks interesting right now, multiple cycles, bottoming. Again, I'm going to use my own profile. A little less data. So 211 looks interesting. 80, 118, momentum. Wow. So had the big buy signal back here in April. Moved up quite a bit. Hasn't broken out of the top. But the cycles look like they have some room to run. But again, the negative momentum divergence concerns me. Microsoft broken out of the upper band here. That's interesting. Let's go a little more data. So this 185 topping, add the momentum, has come out of the upper band, still pointing up. But again, you know, you got negative momentum divergence here, here, here. So wouldn't necessarily be a big seller right here. We could look at this 306. Looks like it might have a little more life in it. But interesting. I'd be looking for a sell setup in this one, even though we're not there yet. Do not short this stock. But not a back up the truck picture for me. I would not be selling if I were long, but I wouldn't be buying here. All right. Did you get me the emerging markets ticker EEM? Okay, let's take a look at that. And wants to look at the 30-year. All right, let's just go EEM colon YFI. All right, interesting. Wow, huge move there. 292 is a long cycle. I like it. A lot of good cycles in here. Wow, I'd call this high cyclicity. But I'm going to add a little more data just to see if I can flesh out that longer term cycle a little bit more. Okay. So very interesting. Man, big buy back here. And excellent follow through. Momentum still out above the band here. 106 maybe. What's this one? 125. Oof, the stability just is awful, even though it's the number 3 cycle. I don't know. Could add it in there. So, you know, it looks a lot like Microsoft to me, except momentum is curling over a bit. Definitely, if I got, well, made kind of new high, but not quite higher than this one back here. So I'd say, wait for a pullback, maybe. We'll see. But not a big buyer here and not a big seller either. All right, and then 30 years, last thing we'll look at, because man, we've gone almost an hour now. ZB equals F is the ticker from Yahoo Finance. Oops. Let me just, sometimes if you have a some data left over in the URL up here, it's good to just clean it out. Start over. Okay, so 30 years. We saw that 189 also on the 2-year, right? But this 189 and 137, maybe the 137 looks bullish on the 30-year. Momentum certainly looks pretty good there, a lot better than it does on the 2-year, right? So that's interesting. Could see a little steepening of the curve with the, no, that would be a flattening of the curve actually, with the 2-year rates going up and the 30-year rates going down. If 30-year prices are going to move up, we might add a little more data there just to get a flesh out the look a little bit. So 179 and 136. This 340 is on the bullish side. 340, we got just 3 iterations of that. I might want to go out a little bit further just to get a little more. Yeah. Yeah, 340 looks pretty bullish. 350, I like it. I like the positive momentum divergence. I guess that would be TLT. If you were doing just an ETF, let's take a look. I think TLT is like the, sorry, I gotta clean it up here. Let me just start a new window here. All right, so TLT is the longer term Treasuries ETF. Going to go out and grab a little more historical data. In fact, we'll add 3 years of data, maybe go back and catch this top here. So we see this 168, 130. Those are similar to the ones we were seeing before. And then this 335 is on the bullish side with momentum being pretty interesting. So I like that so much actually that I'm going to go add it to my cycles collection. TLT. Okay. And then I might even go back and look at my cycles trade portfolio and say, hey, let's see what's in that cycles 2 collection, and let's see how TLT relates to my overall portfolio. Woo, interesting. 14.8% correlation. I like it. So going to add, I know this is going to give me $500. We've been doing about half that. So let's say I'm going to add 47 shares. I think that should get me about in the ballpark of what the other assets are. Exposure wise. Yep. So I added TLT, $250 of exposure for only $18.30 of exposure relative to the portfolio. Increase my exposure discount and my diversification. I like it. I'm going to bag it. And then I might want to just go rebalance one more time now that I've added that, but it's pretty close already. So not really much I have to do. But, you know, if you have more money, you want to put different amount of money in here, you can say, hey, let's do $100,000. Okay. Now your exposure on each position is going to be about $900. And boom, you've got a risk parity portfolio that you can, with 6 assets, we're going to keep building on that. I like it to be 12 to 15, what Ray Dalio called the Holy Grail portfolio. And, but you get an idea of how this works. Okay. So even on $100,000 over a, so this is daily data. So it's over a 10-day period, 10 periods of daily data. So every 10 days, you could see this portfolio move about $2,300, $367 on a, on a $100,000 portfolio. So about 2.5% every 2 weeks would be a pretty significant move in this portfolio. I like it, and I think I've certainly hit you with enough for today. All right. Thanks, everybody. Thanks for putting up with me. Hope you're appreciating all the tools that we're bringing together here to both incorporate cycle analysis into your investing process, and then also what I've done over at RiskSmith. Everything I showed you in that RiskSmith account is free. It's a free account. You can upgrade and give me like $15 a month if you want a higher level, more portfolios and more collections, and a few curated collections by me. But it's really coming together nicely. Appreciate everybody sticking it out, going through all this detail, and I'll see you again next week. Careful out there, everybody. Bye-bye.